Welcome back. The topic for the day is now, if you see here, the responsibility domain of the different levels of management are different. The strategic level is responsible for the overall policies and strategies. And as for the tactical level, they are in charge of effective resource utilization. Now, we already know that the overall plan is given by the strategic level. And within that overall plan, this tactical level will make annual budgets, and they will see to it that the resources are utilized in the most efficient and optimum manner. And as for the operational level, they are in charge of implementing the daily plans. That is, they are seeing to it whether the production process is functioning smoothly, all the transactions are regularly and properly recorded, the purchases is taking place as and when needed. Due to this difference, the information requirement for all these levels will also be different. So as far as the strategic level is concerned, they want all the reports to be summarized. They don't have time to go through all these detailed reports. So the type of information that is required is aggregated or it is summarized. And external information is mainly required. That is, what are the competitors doing? What does the customer say about our product? They are also concerned about the internal information, but they always look out for any external information that has got a bearing on the company. And the information that is required is infrequent. They don't need the information frequently, just like in the case of operational level, who needs information on a daily or on an hourly basis. And the next feature is it has got a long-term bearing. That is, they are looking into the future of the organization. So they want to make a 5-year plan or a 6-year plan, not a daily plan or a yearly plan. So the information requirement should also be suited for long-term planning. And the last feature is it's uncertain. Now, if you're depending on external information, you know that it is highly uncertain. Now we will take the operational level information requirement features. It is exactly the opposite of what is required for strategic level. What is the opposite of aggregated? It is detailed. So operational level requires detailed information. And here it is mainly external information. Here it is internal information. For strategic level, it is infrequent. And for the operational level, it is frequent. And long term, what is the opposite? It is immediate or short term. That is, daily information is required. And here it is uncertain. Opposite is certain. So those are the types of information requirement for the strategic level and the operational level. Now, what about the tactical level? Tactical level is in between. For the first one, it will not be as summarized as is required for the strategic level, and it will not be as detailed as is required for the operational level, somewhere midway. Likewise, for the second point, mainly they need internal information, but at times they need external information as well. And regarding the frequency, it is not as infrequent as is for strategic level, and it is not as frequent, like it is not required on a daily basis. So somewhere in between. And as for the time horizon, it's not as long term. You don't need to plan for 5 years. For the tactical level, it's more or less 1 year. Basically, the annual budgets are prepared by the tactical level. And regarding the certainty level of the information, it is more or less certain, but at times there might be uncertain information. Now we will see the various information systems that are required for the different levels of management. So I've just copied the organizational pyramid here. At the top level, you have SL, that stands for strategic level. The next level, TL, stands for the tactical level, and OL stands for the operational level. So we will start from the bottom. What is the information system that is used by the operational level? It is TPS. TPS stands for Transaction Processing System. And what does it do? It records and summarizes the routine transactions of the organizations like sales, inventory management, etc. So whenever there is a sale or a purchase, the entries have to be recorded. So basically, transaction processing system captures the routine transactions of any organization. And what is the advantage of a TPS? The main advantage is it gives timely and precise information that supports the operational level. Now coming to the next information system, the MIS. The MIS is generally used by the tactical level. Now, MIS stands for Management Information System. It is used for structured decision making. What do you mean by structured decision making? These are decisions that are taken for routine problems. So the procedure of solving such problems is well known in advance, and it is based on the summarized internal information, mainly from the TPS. TPS is nothing but the transaction processing system, and it contains simple summaries and comparisons. Now, as an example, we can say there is a transaction processing system for sales. From that, we can extract the product-wise or the area-wise sales. Or we could see the sales variance with the budget. So this forms part of MIS. So these are just simple summaries and comparisons that are extracted from the TPS. So examples of MIS reports are variance analysis with budgets or with previous months, or exception reporting. Now, what do you mean by exception reporting? Exception reporting means reports that show abnormal negative variances. Example, where the expenses were higher than the budget. The main purpose of exception reporting is to bring the attention of managers to areas where their focus is required. Like if the expenses are higher than the budget, then naturally there should be an intervention from the part of the managers to see to it that the expenses are within the budget. Or where there are adverse variances of sales with the budget, then again an attention is required. So that is the meaning of exception reporting. So basically they don't need to look at all the variances. They need to look at only the adverse variances that require their attention. Now, the next information system that we will be looking into is the DSS. DSS stands for Decision Support System, and it is used mainly by the tactical level. Now, DSS is a tailor-made system that supports semi-structured or unstructured decision making. Now, what do you mean by a tailor-made system? Tailor-made system is a system which is specifically designed for a particular customer or company. So each DSS will be created to suit the interests of each company. And what do you mean by unstructured decision making? Unstructured decision making are decisions taken for problems that do not have a well-established solution. So basically, the manager will have to use his judgment to arrive at a solution. And it contains more detailed mathematical models or statistical techniques. So in a DSS, you can see that the mathematical calculations are a little more complex. It is not like the simple summaries and comparisons that we used to do for MIS. DSS contains detailed mathematical calculations, or it involves statistical techniques. Now, the computer predicts the results for various scenarios based on what if and sensitivity analysis. What do you mean by what if analysis? That is, what if the selling price is increased by, say, 10%? Then what will be the bottom figure, or what will be the profit of that particular product? Or adopting a sensitivity analysis. What do you mean by sensitivity analysis? Now, sensitivity analysis aims to find out the maximum percentage change acceptable in the variables. Now, every company will have a desired profit level. Now, this desired profit level is dependent on many variables. It is dependent on the selling price, the variable cost, the fixed cost, and the units sold. So sensitivity analysis tries to find out the maximum change that we can make in these variables without affecting the desired profit level. So say you are planning to give a discount. So in order to find out the discount that is to be given, or to fix that reduced selling price, you could do a sensitivity analysis. And the decision support system will help the managers to arrive at the solution. Now, the next information system that we will be looking into is the ES. Now, ES stands for expert systems. Now, expert system is also a type of decision support system. So let's look into the definition of an expert system. It is a decision support system which is used at all levels of management. So expert system can be used by the strategic level, the tactical level, and also by the operational level. And it holds specialist knowledge, and it allows non-experts to interrogate them. Interrogate them means ask questions to them and get the answers. So usually this takes place in the field of medicine, in the field of taxation, in the field of law. Now, I will give you a classic example of an expert system that was used in the field of law. This was a news that appeared in the year 2016. Law firm Baker Hostetler hires a digital attorney named Ross. Now, this Ross was an expert system. Let's dive into the details. Entry-level workers at law firms typically spend hours to prepare for the cases. Now, each case file runs into pages. So, in order to prepare for a particular case, entry-level workers had to spend hours looking into the various case laws to get their points. So, after they employed Ross, what was the advantage? Ross will be able to quickly respond to questions after searching through the billions of documents, and lawyers can ask Ross questions in plain English, and Ross will show users what the citations are for its responses. So it became very easy for the entry-level workers to get details of cases. Now, this expert system Ross is not existing now, and you might wonder why. Just look at this headline. Ross will shut down amid lawsuit from Thomson Reuters. Though Ross has been shut down because of a copyright infringement lawsuit, it still remains one of the classic examples of an expert system in the field of law. Now, other areas where the expert system can be applied is in the field of medicine. That is, whenever the senior doctor is not there, then the expert system can give advice to the junior doctors. Or in the field of taxation, now the expert system can calculate the tax liability of employees for the purpose of deducting tax at source for companies. Or it can be used in the field of banking. That is, before sanctioning a loan, you could have an expert system to evaluate the credit worthiness of the borrower. That is by finding out his debt equity ratio, cash flow analysis, etc. So these are just a few areas where the expert system can be used. Now let's take a quick look into the architecture or the way in which an expert system is built. For any expert system, there are three components. One is the knowledge base, the second, the inference engine, and the third, the user interface. Now, the knowledge engineer is the computer professional, and he is the one who creates the expert system. And how does he do it? He will gather the information from the human expert, and he will create the logic necessary for an expert system. Now, if this human expert is a senior doctor, then the knowledge base will comprise of all the symptoms that are associated with a particular disease. Now, suppose the user is a junior doctor, okay? He is not an expert in the field. He interacts with the expert system through a user interface, and he is prompted with certain questions by the system. What are all the symptoms that the patient has now? What are the test results for the blood sample? Once the user answers all the questions posed by the system, then the inference engine will come to play, and it uses the if-then rules. Now, in this context, if-then rules means that if the patient has got such and such symptoms, then this is the disease that the patient has. And what is the next step to be followed by the junior doctor? Even if the human expert is not available, a non-expert can interact with the expert system and gather the details, just like he will get the details from a senior doctor who is an expert in the field. So that is the main advantage of an expert system. So let's just list out the advantages and disadvantages of an expert system. So the first advantage is that non-experts can draw expert conclusions without the help of human experts who are not available 24/7. The second advantage is that when there is an expert system, there is speedy decision making and definitely there is consistency also. But there is a huge disadvantage for the expert system because the rules have to be regularly updated. Now, you might wonder what is the difference between an expert system and the other decision support systems. Now, the specific feature of an expert system is that it is domain specific. That is, it will be related to a particular area like law or tax. But the other decision support systems are not specific to a particular area of expertise. Now we will move on to the next information system, that is EIS. Now EIS stands for Executive Information System. It provides strategic managers with highly summarized reports showing overall trends with options to drill down to obtain detail. So basically, it is for the strategic level and it is highly summarized. And what do these summary reports show? It shows the overall trends and there is option to drill down. What do you mean by option to drill down? Option to drill down means going into the details. That is, sometimes the total profit might be given. So if you click on that, it will show details regarding the product-wise profits or the area-wise profits. So drill down is nothing but you're getting more details of a particular figure. And it contains internal and external information. So what is the external information that they need? External information about the competitors, the customers, the technological innovations, etc. Now let's take a quick look into one of the executive dashboards. The executive dashboard is the primary component of the executive information system. It is the unified visual representation of the KPIs. What do you mean by KPIs? Key performance indicators of any organization. So it is unified, that is, it is in one place and it's a visual representation, either in the form of graphs or charts, so that the strategic level can understand the position of the organization very quickly. So in this executive dashboard, the total profits have been given, the profit margin percentage has been given, and the total revenue has also been given. And they have broken up the total profit geographically. So the country contributing the maximum profit is USA, followed by Japan, China, etc. So in one shot, they are able to understand what is the profit and the profit distribution between the countries. Now, on the right side, you have the top 5 products by total profit. Now, check out this filter. It has been mentioned top 5. Now, you could alter that filter and you could give bottom 5 also. So we can immediately understand which are the products which are the lowest contributors towards the profit. And on the top right, they have shown how close are we to our planned total profit. And in this case, they have achieved 94% of the planned profit. Now, if you had noticed, these are all internal information. That is, what is the profit of the company? What is the revenue of the company? What are the top 5 products? Now, the executive information system throws light on the external information also. So let's take a look. It can give details about the share price or the PE ratio. What do you mean by PE ratio? Market price divided by the earnings per share. So if you notice here, the industry benchmark is 30.4 and our company's PE ratio is 31.5, which is much above the industry benchmark. And this pie chart shows the company's market share. Say if our company is company A, then we have a 25% market share. So from this, it is clear that an executive information system gives both internal and external information. Now, this dashboard can always be customized. They could give information about the debt equity ratio, current ratio. So as per the requirement of the strategic level managers, the executive dashboard will be modified for each company. Now, let's look into the advantages of the executive information system. So the first advantage is it is easy to use. And the executives need not be an IT expert. You've seen the executive dashboard. It is very easy to use. You don't need to be a IT professional to understand an executive dashboard. And the second advantage is there is increased control due to the availability of real-time information. At any point of time, the strategic level managers can know about the profit figure, the sales figure, because it gets updated on a real-time basis. There are a lot of expenses involved with respect to the system. Let's take a look. The first expense is there is increased staffing cost, as many external data may have to be manually keyed in. Now, regarding the market share of the company, there will be a person who will be manually keying in that data. It will not be automatically updated in the system. And the second expense is there is increased maintenance cost due to the change in the information requirement after the initial setup. Now, the strategic level managers may want modified information as time progresses. So that is the reason for the increased maintenance cost. And the third type of expenses, as larger data means more processing power is required. So definitely an increased investment in hardware is required. Now let's move on to the next information system, Enterprise Resource Planning, or ERP. Before explaining about ERP, I will give you a very simple example which will help you to understand the concept very easily. Now, suppose you're going to take part in a hurdle race. So you're ready and you're waiting for the whistle or the gun. As soon as the gun goes off, you run as fast as possible. And each hurdle that you see, you jump over it and speed to the finishing line. Now, my question is, who is doing all the coordination while you are running? It's your brain. When you hear the gun, the ear sends signals to the brain and the brain immediately says, come on, start running. And when the eye sees a hurdle, again the signal is sent to the brain and you time yourself to jump, and your eyes is continuously giving signals to the brain so that you are running within your racetrack. So basically the entire coordination is done by the brain. Now we will take up a very hypothetical situation. Suppose you don't have a brain and each part of your body has been given a phone. That is, your ear, when it hears a gunshot, it has to make a call to your legs and your hands to start moving. And when the eye sees each hurdle, it again has to call the leg and say, jump up. So just imagine the difficulty that your system will face if there was no central system to control it. This was the same thing that was happening in organizations when the ERP system was absent. So what exactly is ERP? ERP is a software that integrates the business processes like manufacturing, inventory control, sales, HR, etc. into a central database. So just like our brain is coordinating all our organs, the ERP coordinates the different processes in any business. Now, if it was not for ERP, the situation used to be something like this. The purchase department had a separate software. The manufacturing department had its own software. And the accounts and the finance, they also had a different software. HR had a different software. These were all disconnected. And periodically, the accounts department used to get the information from the manufacturing department, from the HR department, from the purchase department, and then it used to be reflected in the general ledger. But otherwise, all these details used to be stored in these disconnected systems. Now, just for you to understand how the transition from a non-ERP environment to an ERP environment will help an organization, I will narrate a simple incident that happened while I was working in an organization long time back. I was working as a management accountant there, and there was this one instance where the purchase bill was misplaced. That is, the normal procedure is the purchase department will enter the purchase bill in their software, and then it will be passed on to the accounts department, and the accounts department will enter the purchase bill in its own software. So actually it is double work. So what happened was this purchase bill somehow got misplaced. So the supplier called the chief accountant and said, our purchase bill is due, so please make payment. So the Chief accountant checked in his system and it was not entered. So immediately he called the accounts payable guy and he said, you check with the purchase department and see whether they have got any bill lying there which has not been entered in our system. So this procedure went on for quite some days. The supplier is calling again and he's again reminding, but since the bill is not recorded in our system, we simply cannot make payment. And one fine day, the supplier got so frustrated that he called the chief accountant and he said, "You idiot, the bill is overdue for so many days. Please make payment." When he heard this, the chief accountant immediately got very serious. And he rose up from his seat and then he said, the supplier has called me 3 times and now he is calling me an idiot, which means that I'm very sure that the purchase bill is due. So we are all seated in cubics, which means that we can see the drama that is going on in the accounts department. After he made that statement, we immediately got a reason to pull his leg. So we were all telling him, if it is a misplaced purchase bill, then the criterion for making payment is when you're being called an idiot. So that was a situation that was existing prior to the ERP system. Then after a few months, this ERP system was implemented. So once the ERP system was implemented, the workflow was very smooth because when the purchase department enters the purchase bill from their end, then it is immediately reflected in the central database. So there is no additional work. So it is only at one point that the entry is taking place. There is no passing of documents and entering it there and entering it here. Now we will understand exactly what is being done in an ERP system. In ERP, there are different modules. There are different modules for each department. That is, a purchase department will have a different module. Manufacturing department will have a different module. And the user enters data at one point only. And the information is automatically transferred to the central database. Once the user enters the details in any of the modules, it gets updated in the central database. So at any point of time, we can know the sales orders which are yet to be executed, the goods which are in transit, the actual stock position. So there was so much transparency that managers had full control of the situation. And even in the central database, the information is available only to authorized users. Now, the sales people will have access only to their sales module. They will not have access to the general ledger wherein they can see the profits that is achieved by the company. Or they cannot view the salary package of the CEO, which comes from the HR module. So only authorized people can see the information in the central database. Now we will look into the types of ERP system. Now, before we dive into this topic, I will give you a very simple example so that the concept will be very clear. Now, majority of you might be doing a workout. Now, you could do your exercise either in a home gym or a commercial gym. Now, what is the difference between the two? In a home gym, all the equipments are owned by you. And the maintenance cost is also on your shoulders. So basically, there is a lot of upfront cost involved in a home gym. In a commercial gym, you don't own the equipments and you use it for a monthly or a yearly subscription. So just like that, there are two types of ERP system. One is the on-premise ERP and the second, the cloud ERP. In an on-premise ERP, the ERP hardware and software is owned and maintained by the company on-premise. Now, the hardware that is mainly used are the servers and all the networks that are used for the functioning of the ERP. What do you mean by server? A server is nothing but a very powerful computer that receives, stores, and sends information to the various connected laptops or devices. So basically, it's a storehouse of information. A server is generally required when something has to be shared between the employees. If the company has only one employee, then no server is required. So basically, in an on-premise ERP, local servers are present for the company. Now coming to the cloud ERP. Now, what do you mean by cloud? Cloud refers to the remote servers accessible through internet maintained by third-party vendors. So first of all, you have to understand that it is remote servers. The servers are located in remote locations. That is, it is not situated within the factory premises. And how do we access these servers? It is accessible through the internet. And who's maintaining these servers? It is basically by third-party vendors. Now, you all might be using Google Drive to save your photos or your videos so that you could easily share it with your friends and relatives. Now, Google Drive is a cloud-based storage which is provided by Google, but that is only the file server. Only files can be saved, like videos, photos can be saved. But here for cloud ERP, it's an entire database or the entire ERP system which is stored in remote servers. So what is different between an on-premise ERP and a cloud ERP is that all the laptops and the devices access the remote servers through the internet. So let's make a note of the main points. In a cloud-based ERP, the ERP hardware and software is owned and maintained by third-party vendors in the cloud. So basically, it is remote servers. Company can access the ERP system through the internet by paying a subscription fees. And what are the advantages of the cloud ERP? Lower upfront cost. We don't need to make a heavy investment on the servers, on the networking equipment, etc. And scalability. What do you mean by scalability? Scalability means you can scale up or down because basically you are paying the subscription fees based on your usage. That is based on the number of users, based on the storage capacity that you have used, etc. So if you want to scale up your business, then basically you just need to pay a little more extra subscription. Now, if it was not for cloud ERP, that is, if you had gone in for an on-premise ERP, if you have to scale up your business, then additional investment in hardware, etc. is required. But in cloud ERP, you just need to pay an increased subscription fee. That's all. So that is the meaning of it helps in scalability. And accessibility is the next advantage. Accessibility means that it can be accessed from anywhere where we've got an internet connection. And automatic updates. Now, all the updates will be taken care of by this third-party vendor. It is not on our shoulders. So basically, we don't need to be worried about all the updates that is taking place. Now, the next advantage is disaster recovery. Now, disaster recovery means there will be sufficient backup files kept even in different geographical locations that even in the event of a natural disaster, the company will be able to restore all its files. Now, what we just read out are the advantages of the cloud-based ERP. Now, there are common advantages for the ERP system, whether it is an on-premise ERP or a cloud ERP. The first advantage is it gives real-time information as and when the user enters the data in any of the modules. Like if the purchase department enters a purchase bill in the respective purchase module, it automatically gets updated in the central database. So there is always availability of real-time information. And always note that once the purchase department enters the purchase bill, since it is automatically updated in the central system, there is no question of passing on the purchase bill to the accounts department and then they are entering it again. So there is no duplication. That is the advantage mentioned as point number 2. It avoids duplication because it is common data files for all functions. That is, each module is linked to the central database, whether it is the HR department passing an entry for a salary or the sales people entering the sales bill. The data is entered only at a single point. Everything will be reflected in the central database as and when it is entered. The next advantage is optimum inventory levels can be maintained. And it avoids stockouts or excess stock. Because everything is updated on a real-time basis, we can actually know the stock position at any point of time. There is no question of managers calling up the warehouse to check on what the stock position is. Now, the next advantage is it facilitates multifunctional analysis. Now, all the functions are linked to the central database. So it becomes very easy for supply chain management. Now, supply chain management means coordinating the activities right from the time you get the raw materials from the supplier till the finished goods reach the ultimate customer. So managing the supply chain became very easy once ERP was implemented because everything is reflected in the central database. So we can always ensure on-time receipt of raw materials and on-time delivery of finished goods because everything is reflected on a real-time basis in the central database. And it also facilitates activity-based costing. In activity-based costing, the indirect expenses are divided between the products based on cost drivers. For example, take the case of purchase department expenses. It is divided between the products based on which cost driver? The number of purchase orders, right? Now, in an ERP system, the purchase orders gets updated into the central database from the purchase module. And the purchase department expenses, that is the salary of the purchase department staff, gets updated into the central database from the HR department. Since all these things are coming together in one system, it becomes very easy to do an activity-based costing approach. And it also facilitates balanced scorecard performance reporting. Under balanced scorecard, every company is evaluated based on 4 perspectives. Now, one of the perspectives is the internal business process. So in order to evaluate the internal business processes, whether it is manufacturing, HR, purchasing, etc., everything has to be centralized in a central database. So ERP facilitates that, and hence balanced scorecard performance reporting becomes very easy. Now let's move on to the next information system. Now, if ERP is considered as a mother, then the baby is strategic enterprise management. But please don't write mother and baby for the exam. This is just a representational picture. What you have to write is strategic enterprise management is the strategic offspring of ERP system. Now, we have already seen that one of the advantages of ERP is that it facilitates multifunctional analysis like supply chain management, activity-based costing, balanced scorecard reporting, etc. But ERP only facilitates that. The information system that actually executes that is the strategic enterprise management, because ERP is basically operationally focused. It is focused on whether all the operations or the business processes are integrated in a seamless manner. So the next step where all these things are done is the strategic enterprise management. So strategic enterprise management assists management in making high-level strategic decisions with tools such as supply chain management, activity-based management, balanced scorecard, business process redesign. So this is actually a product of ERP. If it was not for ERP, we would not be able to do strategic enterprise management. Now, before taking up the next information system, I will share with you a small incident from my life. So last week was my birthday. And for all the birthdays, my husband never remembers my birthday. My kids have to remind him, it is Amma's birthday, so please wish her and all that. So this time it was different. This time in the morning, he came to the kitchen and said, "Happy birthday." And I was like, oh my God, you remembered? Because my kids were still sleeping. So obviously they have not reminded him. So I was like overjoyed actually. And then he said, we'll go out for dinner and all that. When it was night, I actually told him, I'm so happy that you remembered my birthday. So it was at that time he said, I did not remember your birthday. After all, you know me, I will not remember your birthday. Then I asked him, then who reminded you? So he said, in the morning when I woke up, I accidentally saw the display screen of your mobile. And this SMS was displayed. Many, many happy returns of the day. And that was from the bank. I said, you should have used your brains. At least you should have remained silent. So at least I would be happy. But what to do? My husband is that way. So what is the information system that prompted my husband to wish me on my birthday? Let's take a look. Customer relationship management is the software that consolidates the communications and information about customers and leads. What do you mean by leads? Leads is an interested consumer. That is, he is not yet your customer. He might have made an inquiry with you and so on. And all these information is consolidated into a centralized database. Now, most of the CRM software is integrated with communication apps like email and SMS. That is why you're receiving wishes for your birthdays, etc. Now, coming to the advantages of CRM, The main advantage is it is a centralized database. That is, information related to each customer will be saved in a single place. That is their name, their mobile number, their email ID, and whatever query they have made, and what is their purchase history. So once you get all the information in a single place, it is very easy to communicate with the customer because we know what the customer needs. And the second advantage is automation of processes. Once you make a phone call or send a mail, then immediately you get a response message. You get a response message something like this: thanks for reaching out. Our sales personnel will contact you shortly. Or to attract existing customers, they might give discounts or they might give these membership cards. So even for that, the messages will be sent to the customer, something like this: welcome to our VIP loyalty program, etc. So all the processes gets automated with the customer relationship management software. So for every campaign that the company does, all the customers are tagged. So in one shot, information is given to all the customers. Now, the other advantages are definitely there is better customer service. And the fourth advantage is there is detailed analytics because we know the purchase history of that customer. And definitely there is increased efficiency, and ultimately it leads to increased sales. Now, please note that the customer relationship management can be integrated with our ERP software as well. So everything in one central database. So here we come to an end of today's session. I request all students to go through the exam kit so that you will get a feel of how the answers have to be drafted.